Good afternoon, everyone, and welcome. Happy Friday, March 27th, 2026. Trading Trends here with John Salama, CMT. Are we having fun yet? I'm wearing my Breaking Benjamin shirt. Says I will not bow, and the bears are saying I will not bow. Absolutely. The market is breaking. We've now been under the 200-day moving average all week. Let's get into the doc. Before I do that, we have made some portfolio moves, but first, some programming notes. I am out next week. You noticed it was a little bit later on the videos this week, a little bit under the weather as well. But next week I will be out returning with videos. Don't forget, Friday is Good Friday. Market is closed, but crypto will always trade as it does. Ethereum got clocked this week a bit. We'll take a look at it. Yes, I'll be back with videos on Monday. It should be April the 6th is when we shall return with videos. Portfolio move. So we covered the GDX short today for a profit on that rip today. We'll look at the GLD metals caught a strong bit today, and covered the airlines short jets for a small loss, about 3% on the actual spot movement. And so the current portfolio holdings is short TLT, which is bonds, higher rates, higher for longer, higher forever. Short regional banks. It's almost like the similar trade. The banks, obviously regional banks need rate cuts. They're not getting it seems, so at least Q4, if that, and obviously higher for longer, so the rates go up. So it's almost not the same trade two different ways. It's almost a barbell approach where they're almost, equating each other in terms of market exposure. So I love the trade. And I replaced the Jets short for IGV. I'm short software today. It's already a profitable position. Software is not a wonderful place to be. I was watching CNBC the other day. CEO of Marathon, Bruce Richards, said, him and the CFO, I don't know if I mentioned this on the call or in the video before, but they will say no to any software funding due to it, in their belief, going significantly lower by 2028, like significantly lower. So if anyone brings a software deal to them, they say no, thank you, pass, due to the massive repricing that is going to continue to happen at an exponential rate from Anthropic, OpenAI, et cetera, et cetera. So that's part of it. And then, of course, you get private credit, and you see HYG getting 3-month lows today. And usually when you see credit break, you see stocks break about a month later. So let's get into the doc. Happy with my software short. I've been writing about it for literally 4 months. I've been in it. I've been out of it. I'm happy to be, I've been short KWeb. There's different ways to do that trade. But let us get into this here. Trading trends. And there are trends here. Today, financials, software, and Bitcoin. That is the hurt, truly. So if you believe Bitcoin is more software, then yeah, that was correlated today for sure. And financials, lower. We'll take a look at these charts. And then energy to new all-time highs today, up on a day like today, new all-time highs for the XLE, and gold and utilities go up today as well. We'll take a look at the charts. And really, when you step back from this week, this 1 1/3 loss of 1%, 1.3% loss in the S&Ps. When you step back, this was really about a 7% decline, more than 1% a day, give back in Ethereum and software towards, basically new 52-week lows for software, essentially, and Ethereum just looking like an absolute dog, and a 7% reversal higher in the gold miners. We were not wondering, but we were looking at the charts, seeing when, and I'm short GDX, wondering when the ATR was going to expand, when the trend was going to break, and it did look like a bottom. We talked about it last week on the show. I said the metals are looking decent. Hopefully, I will get out on the ATR loss, or the ATR stop, as I did, and then hopefully it turns into a long, and I'm closely looking at GDX for a new 1-month high, or the SILJ, which is your year-over-year leader. So let's get into the charts. I know that was one heck of a preamble, but let's get into it here. Let's get into it here. The dashboard panel. Hopefully this works. Oh boy. First time, boom bomb. Okay, so SPY's down 1% here to 638. I told you, as soon as we broke the 200 moving average, not to be dramatic, we talked about it last week. I was talking about it on the morning show with JC and Straza. I did not get warm fuzzies once we broke under 660. This is perfect. If you could put my videos into AI, don't care, whatever. You could summarize what I've been saying. You're not going to get warm fuzzies once you close the 660. We had, for 3 months, we set a wall support, and I'll look at the chart in a minute, at 670. I'll just save it for that. But anyways, I was going to say, once we broke 670, that cement wall, and now you look at the 200 moving average, and now it's starting to go flat. The next thing I start to look at, just to put a line in the sand, is the 1-year 50% Fibonacci retracement right in the middle, basically, is where you are in the middle of the range. And that gets you to 590. That would be my lower tier, seeing as the 52-week low is 482. So that's what keeps me centered immediately once I looked at the actual chart and I contextualized it through, data visualization, looking at the charts and the candles and support and resistance. I saw that 615 was a bunch level going from last August, I believe, level 615. So that looks like a level for me. We'll take a look at it, as I said, in the charts, but this looks ugly today. This is not a rally of any kind, obviously. I've been telling a trader as well, this looks like an orderly sell-off all week. Everyone thought, Black Monday or a heck of a rise, blah, blah, blah. It doesn't really matter. Every single day this week, we have closed below VWAP. They may have fooled you. One of the days we'll look at the candles, we were up, I think, 1% or something like that, or maybe 80 bips, and it looked impressive, and vol was down 3%. Dude, we didn't hold VWAP any single day this week. There's been orders from clients to advisors to portfolio managers saying, get me out of this by the end of the week. Okay, so there's really no difference. Okay, let's go into the tape here. Qs, what's going on here? Qs down 1.4%, Nvidia down 1.5%, Tesla down 2.5%, Micron bucking on the trend up 2%. You usually see that when the market's ugly. They'll go into Micron when the market has some kind of an up move. They'll sell Micron. Meta down ugly 4%. They got absolutely smoked yesterday, down 8%. This stock is down 20% in 2026. They have child extortion lawsuits. They're going to lay off a fifth of the company. They shut down the metaverse. Some crazy things going on at Meta. Crazy, crazy expenses. They're actually laying off the people to fund all that AI expense. It's not just because AI is replacing them. It's actually because they actually have to fund it. Wild. Microsoft down nearly 2%. That thing's down a quarter of value in 2026. I believe that hasn't happened in a century, I believe, or something for Microsoft since it's been founded. I don't think they've had a worse 4 months of the year. IWM, ugly. It's like a program sell across indices, down 1.1% for that. The Dow's also down 1.1%, so it's just a program exit out of equities on a Friday. Amazon down 3%. Don't forget, last Friday, as soon as the futures as soon as the market closed, Trump and the U.S. government put out a thing saying, we're going to put in aggressive strikes into Iran, like literally at 405 or 420 right after the futures close. So we'll see what happens today after the bail. Amazon down 3%, Google down 1.5%. Gold, look at that, green on your screen, catching a big bid, 3.5%. I got out this morning on that rally. And what else is here? At Palantir down 3% to close it out. All right, really quick intraday. So here is the opening candle, the big one. Boom, you could tell what they wanted to do, flush it. And then I said, let me see here. What are we going to do versus VWAP? And then it really was just barely holding the line. Right here, I was getting a little bit, not spooked, but I was curious where I was going to cover. Jets, and I obviously wanted to short IGV at an optimal level. I did both very close to VWAP execution. And right here, I could tell the market was not ready. They were selling this into any kind of strength. And now you can see a new low of day, just fresh, just about 35 minutes ago. And look at that ugly candle here, trying to tap VWAP and then going lower. So S&P absolutely not giving me warm fuzzies. More importantly, as we zoom out here, okay, this is looking ugly here, obviously. So this is starting, since the 19th. I'm looking, this is close enough for me of a close below. That's not good. So that's 8 days, calendar days. Now we're under 200-day moving average. That's not good, obviously. The moving average on the 200-day is still going up by about 18 cents a day. This is going to stop pretty soon. The S&P, wild as it is at 6, almost 7-month lows. So if you're still trading some kind of an old soft landing playbook, whatever have you, understand that we are at basically 6-month lows. And look at that. The superstar kid oversold. We've just squinched into under 30 RSI. That is technically oversold, and we're looking at a 14-day time frame on a 1-year chart. Last time we were oversold was the day after the prior 52-week low, almost just about 51 weeks ago. History doesn't repeat, but it certainly often rhymes. And that handle when we got to that was 482, April 7th of last year. Remember, 30%, this country, boom, this country, that. And also just really something that's interesting here, look at the S&P investors refusing to hold a bid on this since February 26th. That was, for you home gamers, 1 week before the war started. This weekend started a while ago. Once this was so important, this February, let me just point out one more time. That February 26th, that was the week before the war started. If you remember, the year started when the whole Venezuela capture. We've been going lower ever since. And then truly 2 days later, you broke that cement wall, honestly, of 672. You tapped it there on the 3rd, the day of the war, and then a week later, it's a slinky going down the stairs. So this old support, that's cement almost at 662 now. Now you're having a convergence and all kinds of things happening at that moving average level. It's getting further and further away. Obviously, we are what is that? 640. It's like $23 away, about 4%. I mean, obviously the war ends, something like that, and then we go shooting higher. But this does not look wonderful. I think we go lower, but any kind of bounces obviously should get you to a sort of a kiss to that 660 to 666 level, just due to the rising volatility. But we are going lower here. Again, I always say, fractally, longer term, it doesn't really matter. Once you have a breakdown and you reach oversold, they're going to sell first, ask questions later. You are on the precipice of this right now because you broke 652, and pretty emphatically. So where does it go? It really depends on the momentum. As I said, I really am eyeing that right around the 618 level that coincides with that August first low. It's a little bit too cute. Really, it was the level that we were struggling with all of last July when we were entering the overbought phase. So I think that's where the buyers will step in. But that is a ways away from here in the SPOOs. All right, let's get into some charts here. There are many things moving today. Let's get into it. Nobody told energy. Well, of course, energy is the center of the universe right here. XLE, oh my goodness, 83 RSI, and that's why we're not in it for the turtles. Yes, you do buy breakouts, but it's a little bit convoluted. It's a little bit difficult, but I've been reading into it and working up on it. You don't chase the breakout once it's like 83 RSI. It just can really fall from you very quickly, even if there's not a ceasefire type news. But XLE, this thing continues. Look at that. All-time highs at 62.60 here, essentially. This thing's been getting higher moves here. I think we did actually have a call on this maybe 1 to 2 weeks ago when we just gave you the ATR. Might have been last Monday. I'm not certain. I got to check my notes, but we gave the ATR. It was wide, and basically we said, you can get in it right there. I think it was honestly, that was 2 weeks after the war started, the 17th. Right around there. VWAP that day was 58.5. Just back a little exercise here. ATR is 116. We said get in, but if it goes down $2.30, get out. It never happened, and now you rode that stock from 58 to 62.5. Right here, obviously nosebleed territory. My upper target here was around 63, but this ATR looks like this still has energy here. This isn't collapse energy, get it? This isn't collapsing anytime quite yet. I would love a pullback back to 58.25, something like that. Invite you here to, the S&P is underinvested in XLE, in energy, so it doesn't make a lot of the index. So by owning the index, you are super grossly under owning energy. So if you get any kind of a pullback to 58.5, if you're lucky, that would be extraordinary. But this one looks good. If you want to do it today and you chase it today in nosebleed territory, the ATR has risen a bit to 126. So about basically $2.50. You could chase it right here. If it goes down to 60 even, get out because it's probably going to 58.30. Save yourself that $1.70. But they're loving it today. Energy up 1.76% to new all-time highs. Look at what's returned to the safe haven game. It's gold. They're not selling it now. It's no more significant deleveraging as we used to be seeing. The metals have finally perked up. Look at the chart here, and you have to, of course, look at the candles. Here is still in free fall. This was getting a little scary, and I was really enjoying my GDX short, obviously correlated to gold. It's 425 hold, we'll say, and I didn't think it was going to touch the 200-day moving average just because gold, they don't never been thinking about selling their gold, and then you got oversold. I just really like the floor there at 400 even, and it looks like it's been holding. And to be frank here, so the call, it's pretty interesting. So I think the metals look good here. They're going to be volatile, not a straight line up, but I like what I'm seeing here structurally. I want to see obviously what happens when push comes to shove here at the 50 RSI, which would correspond with a move to right around 440. I do think that's where we're headed. My curiosity, seeing what happens with the macro thesis, is do we continue to go higher? Because this target to me still looks like it can get to right around the 495 level. Don't forget the all-time high is at 510 essentially in GLD. So I think we can make a huge rip here if we rise to 440 and we hold it. And this is all in the rear view. I think it's possible. I'm not totally sure that we're out of the woods yet. A confirmation would be, 2 successive closes above about 430 would let me know we're going to 440 and beyond. So GLD looks good. I got out, as I said, of my GDX short. And if we're anywhere at, 1 month highs, so I'm just going back to February 27th here, highest level. Yeah, unfortunately, that's going to be pretty high there. We would need to buy something like, way above breakout according to the turtle rules. But gold are loving it today. To you metal bugs, congrats. Here we talked about utilities going to shape up and it's going to find a bid, and there's absolutely worse places you can be. Well, guess what? Today they're absolutely loving utilities. I think this $700 billion AI infrastructure is starting to concern people. Billion, trillion, what's a couple among friends. This is kind of what I was talking about. Seeing right here, we got to 50 RSI. Push comes to shove. What's going to happen? XLU is doing it. I have in the cards this getting to at least 46. If folks really, if it starts to perk up, I do have 48 in the cards, which would be new 52-week highs for utilities. You'll also note it's been green this entire week, unless you're declining volume, maybe lesser enthusiasm, but with rising chart, with a rising tape, beautiful hole, the 200 moving average, a bit of a purgatory here for 2 days right after January 7th, January 8th. Several periods of overbought, and notice that on the decline, not oversold like a gold, like a SPY, former superstar. So utilities looks poised to go higher. Love what I'm seeing on the candle. View up on the day, 45.73. It's holding that. It's just about 16 cents inside of the day high. Things are looking good with utilities. I expect this to get to, obviously, 46 is where it's at now. I do believe this heads to $48 in the next 2-3 weeks. Trades, stuff because the vol environment. I would do spreads here. So you could do, I would buy maybe like the 47, 48 spread in April. I'll have to check the liquidity. It's worth it. Again, this is XLU utilities, so it's really hard to play the single name. So if you have a thesis on utilities, you kind of have to play this ETF. So check if it's worth the squeeze. Also, you could sell the 44 puts and then buy like the 43s against it. But I really don't think that's going to pay you. Always check if the juice is worth the squeeze. All right, so those are the winners today. Energy, gold, and utilities. If you're owning that and it's down tape, congrats, you are loving it. That's the bell of the ball. Those guys are crushing it today. Let's look at who's getting crushed. Financials, ooh, you ugly. You ugly. I'm sure the regional banks, they need cuts. They're not getting them. No bueno, no bueno, no bueno, por favor. XLF, this looks like a money flow sell. Oversold again. You had this on March 12th. A huge breakdown. This isn't 6 months for XLF. Look at this. I have to go across the cursor. You guys might not even be able to see this. We're going back to April 30th of last year. This is an 11-month low for financials after, of course, beginning the year so amazing. JP Morgan with those earnings. And now, things are not so gloomy. Nowhere near holding a 54 RSI since January 12th, just to let you know where the control is here. I thought this was going to have a little bit more of a rally here, like say from this move from 48.80. I thought we were going to get a little bit higher to about 50, maybe a little bit more than 50. Unfortunately, look at these tall wicks here on the top. That's folks saying yours, no bueno, and they are hating this today. Today, view up 48.43. Can't hold that. It is literally 16 cents away from new lows on the day, down 2%. I'm short the KRE. You could probably short this. I mean, the candle looks horrendous. No, you are at a 29 RSI, so you're getting in a little bit late, maybe like fourth inning in this run. But things do not look so well here with financials. The ATR is 89 cents, call it 90. You can do it here if it goes up against you $1.80, meaning basically it goes up to $50, get out, because it could have more of a dead cat or more of a bounce against it. So be careful. But otherwise, looking at the chart here, this looks like it's poised to go to at least $47 even. And then after that, if it doesn't hold that, I would think it has to get to about 45.5. So financials looking ugly today, down more than when I wrote 1.7. Now it's down 1.8. Next, software looking horrendous. Shorted it today, believe it or not. So I don't think we're late in this. Like I said, those conviction comments from Bruce Richards from Marathon was amazing. In 2026, just to hear that, and they survived this correction very well, he said. So really, again, this is just for you home gamers, I guess. September 23rd is when software peaked. This is when we were bullish on Zscaler and DoorDash and Monday.com and Atlassian and you name it, okay? Everything was wonderful about the end of September, okay? $118. Once stuff really hit the fan, you see this oversold. That's a little bit of a signal. Folks saying, starting to second think this. I'm not really loving the software thing right here. It broke under a flat 200-day moving average. This was the kiss of death right here. right here, January 8th, when that massive rotation happened and people really doubled down on the hard assets, things that you can drop on your toe and get hurt, stuff on the periodic table of elements, they said, no, thank you, software. I think Anthropic's going to eat your lunch. All the way down. And just so you know, like that kiss of death right here, it happened on January 7th at a VWAP of 106. That didn't stop until $78 VWAP close on February 24th. And now here we are at 77. And it came up in the signal for turtles, hence why I sold today above that VWAP level, and it's already profitable. I'm looking forward to pyramiding, hopefully, on this breakdown here. That's a 52-week low. That is worse than here, the April 7th low, obviously, hence that. And also, last thing on this, this hasn't had a 55. This is disturbing. This has not been above 55 RSI going back to December 10th. So, folks, this isn't, exactly, this is a 3-4 month, this is a leprosy type of view of software saying, no thanks. I think this is going lower. Dead cat bounces, though, would take it to 83. I'll hopefully be stopped out of them by that. But I don't think this is working. I think you had the rally from here, honestly, $78. It got you that nice move, $10 to 88. And now, boom, ball go off the table again because it's weak. All right, and the next one that's interesting, the next candidate immediately in the screener was Bitcoin. So IGV was a better risk to reward due to ATR, less volatility, believe it or not, and well, obviously versus Bitcoin, I think, and then more position. So hence why we did it. But it was very close, almost similar, and that's on the cusp of breaking its 52-week low. Bitcoin story peaked on October 6th, so just around 2 weeks of that period around software. And this was a little bit more of a cleaner break. Really no reason. I mean, I remember, unfortunately, in the longer-term account, I bought IBIT right around here because I said, at least it's on sale versus the year, but it's likely to go lower, truly. And I did that mid-November, and I think I posted a video, obviously. And then this thing has continued to look just ugly. I give it a dog a bone because it had a rising 200 moving average up until here. And then, unfortunately, once it could never break to that, north of $55, boom, it went all the way to a VWAP that day on February the 5th. Of what is it, $37 again. Down 3.8% today. I think it's going lower. That looks ugly. I think it takes out the 52-week low. Candle's looking ugly here. See how it trades, of course, this weekend. But this looks like, to me, IBIT wants to get to, honestly, $35. I think we're headed to new 52-week lows, which would correlate and correspond with Bitcoin to sub 60K prices. I'd written an article about 2 months ago. We're doing an overlay versus 2022 when the Fed hiked and software was viciously repriced, and Coinbase and Bitcoin and Ethereum was dragged down massively as a part of that. And it lasted several months, and it pointed to about a 53K settlement for Bitcoin around July. And it's just surprising that it really is looking solid, honestly, in terms of that. So very close. I short IGV. IBIT's going to move very similarly as, technically now the market is viewing software or Bitcoin as more software stock. So that is that. All right, top 3 gainers of the past 5 days. Let's get into it. The number one, and I'm glad I got out of it today with a profit. The number one trade this week, gold miners up 7%. Half of it coming from today alone, GDX. You can't short a goat like this. This is top 5 year over year. I'll do it at the end of the show because it's Friday. Friday. But this looks great. This looks poised. There's several trades to do for this, I believe. This looks like it's headed to $93, to be frank. So you could do you're going to be expensive, but you could do the June 93 calls and then sell, maybe sell the 93 Aprils against it. Or even, something 2 weeks out. Check the duration on this. But this chart looks absolutely tremendous. We had talked about, and this is the thing about markets, we talked about this before, and this is about levels across markets. This is a good point. The horizontal lines being important. We talked about cement hold for the S&Ps breaking 670. That's basically the same thing when I said here, I'll sell the 90 puts at GDX. I would love to own them there, worst case. And look what happened. It slipped at the next level to 80. So basically, sometimes the market gives you a lot and a little. Sometimes it gives you a little and a lot. If you've been a long-time trader, you know what I'm talking about. So March 2nd is when GDX peaked. I did not think this story is over. I know I was seeing some, pretty large traders say, when you have a massive move, this decline, so you have a massive incline like this and then have a massive give back like that, that's the end of the move. I don't think that. You have a rising 200 moving average. I don't love that it's way under 50 RSI. Even with this rally and holding the 200-day moving average, we've not been able to hold a 50 RSI in GDX since the day after the all-time high. So, or the 52-week high. So don't love that aspect. But I do think in the chart, this is headed to 93. So that's one of the trades. Also, if you want to sell the 80 puts, going about 2-3 weeks out, I think the metals are perking up here. I like what I'm seeing. Just look at the chart. Just look at that structural chart here. Rising 200-day moving average. Folks stepped in here and said, yeah, I'm going to buy it at 80. These are the gold miners. So those are the trades for that I think are best risk to reward. I think it gets to 93, and then possibly in 2 weeks ish time, it's up $3 today alone. I think in about 3 weeks time, if it gets above 93 and it holds there for a day or two, I do believe it's headed to about $100. So I think good things are here in gold. I think things are so bad in the macro that folks are finally going back to the dollar now. Not the dollar, to gold here in this really the stagflation era that we're in. Gold mine is the best trade this week. That's what the market's sniffing. Number 2 is XLE. We already looked at this chart, so I'm not going to crush it again here, but up just a tad less than the gold miners. XLE up 5.7% this week. And this one very quietly, the third best gainer, Brazil, up 5.5% this week. Look at this chart. Very interesting because we're not going through a lot of all-time highs or 52-week highs for a lot of geographical ETFs. Note that this group peaked on February the 25th, EWZ, on a bearish divergence here. You see the RSI not even squeaking 67. Don't love to see that. Typically, you get a move to the 20 or the 50-day right after that. And that's what happened. Don't like to see the lower lows here, but I do like sticking that landing right there at 34.5, area that former breakout on December 4th, and that gap up actually on January 21st, rising to a moving average, starting to straddle 50 RSI. Decent looking chart. I don't like the candle today. That looks ugly and like it wants to go south again. View up on the day is 36.73. Right now they're saying no thanks. I think it looks a little bit tired here from the rally here from 35, and given everything that's going on in the macro. Like I said, I think there's a reason that we're not going through a lot of national ETFs. Can't find the words. But there's worse places that you can be. I just think it's a little bit tired, and I think 37 is going to be resistance, and this could send this back towards $34. I don't love the structure here. I want to see what happens. I wouldn't be the first one to dip in here. Although it's had a great week, up an average of 1% a day, but today it looks like reversing that trend with that rejection, the Dikembe style at 37.5. All right, top 3 loser of the past 5 days. Obviously, when the S&P is down 1.33% in the week, most things got dragged to the downside. And the whipping boy again. Sorry, you Ethereum holders, bag holders. I guess at this point, I'm owner too. But Ethereum whipping boy this week, down 7% this week, the worst ETF anywhere, down 7%. Half of it coming from today. Look at the rally you had. Okay. Coming off of 1370 all the way to 1770. But look at that. Oh, what's this? A red line looks like kind of important. Yeah, it's your 50-day moving average where algos actually sift that out and find a falling 200-day moving average and a falling 50-day and something that came up way too fast, more than 10% in 5 or 10 sessions, and they say yours. That's exactly what's happened. This thing, it's sad that it can't even hold, 1610, which is its 20-day moving average, which is just trying to consolidate higher. I don't like this. This is, technically more software. Like I said, I almost shorted Bitcoin instead of IGV. See if I take that signal in aggregate. This looks like it's headed to, what is the low here? Not 52-week low, but the local low, 1370. Yeah, I think it's headed to right about that, 1370 to $14 over the next week. It's probably, I think it feels like it's going to be an ugly flush. Like it's going to happen quicker. I don't think it's going to happen for the next 3 weeks. I think it might get over, middle, maybe towards the end of next week. The worst trade on the board, Ethereum, down more than 1% average a day, and today picking up steam. Definitely see how this one trades in the weekend. And then I'm not going to, bludgeon this point again. IGV, I just shorted it. It's the second worst trade on the board, okay, for the week, down 6.3%. And then this one we haven't seen in a while because we usually, used to feature it when it was ripping to the top, Kathy. Love you, Kathy Wood. October 8th is when this basket peaked, when that NASDAQ, crypto euphoria at nearly $93 overbought. Things were going great. And then really this one fell into hell here, February 3rd. So this is what you don't want to see in the S&P. If this is an expression of risk on assets, obviously this is mega risk on. with Tesla and crypto and Coinbase and everything else. But if folks are seeking liquidity and funds from here, that's not a great place to be. That's exactly a draw point when we said SPY's at 7-month lows. Look at this. ARK is at 9-month lows, and then you get to where XLF was before. So it's weakness overall in the market. They're absolutely taking risk off. In terms of this ARK specifically, it's, unfortunate. The 200-day moving average in ARK now is going up by a penny a day. I expect that to stop with these new break lower very soon, and that resistance now is going to be staunch at $77, about $12 higher. Look for this to base in the next week or so around $63. I mean, let me look at the chart here. Oh my gosh, she ugly. Maybe 58, maybe over several weeks. I don't think that's going to happen, but they really are hating it today. This looks ugly. The rally was 68 to 77 to 76, and they said no, thank you. Any kind of bounces towards 71, they're going to sell this lower. This is not a risk-on environment. Nobody wants growth right now. They're fearful of inflation. Nobody wants growth, large cap, risk on. It's no way now. That is the third worst investment this week, down 5.5%. Most of that coming from today. All right, so top 3 trades of the past 5 days. If you were short Ethereum, these past 5 days, if you were short Ethereum, long the gold miners, and short IGV, congratulations, you absolutely perfect this market, 10-10-10. Now, to close, we have the final top 3 trades of the past 52 weeks. That's a year. And let's go through this. We tried to keep this as uncorrelated as possible to really show you where the durable, lasting trends are. I always perk up when this comes up in the journals. I would love to anchor the portfolio around this as much as possible, but it's always constructing and obeying the rules. Number 1, SILJ, your junior silver miner. So yes, we're still a world full of the gens, and this is absolutely risk on through a leverage play. It's junior silver miner. So, silver more spec than gold. Junior more silver than senior, but this looks great. I love what's happening here. This group did peak on January 26th at $41, and look at that, a gross give back all the way to 26, a beautiful hold. The 200-day moving average right there is at you're actually equaling with your lower Bollinger Band at 2430. That is your support, about 10% above that. I like this, almost similar to what I said about GLD, like a weight of the evidence. Should this get to see, look at this, what happens here. We haven't had also above 50 RSI since we got a rock's throw away of its 52-week highs. That's what I'm saying. I need to see conviction here. I'd rather buy into strength when everyone's so fearful in the market and you have expanding volatility. But this looks like it is going to be headed to $31. A couple things. You can buy the straight out stock right here at $27.65. It's a 194 ATR. It's pretty massive. So the give back is basically $4. So if you chase it right here at $27.65, if it goes to $23.65, you get out because it can obviously go lower. Other ways to do it. I mean, I kind of like the idea of buying, check the option chain liquidity if the juice is worth the squeeze. But something like the June 31 calls, I like as well. You'd, of course, have to sell maybe the April 31s against it. That's a decent trade, in my opinion. Yeah, I think this is going to have a good 2-3 weeks. It's the best trade of the past year. Look at it. It has not had any kind of hard times going back to last May. Beautiful looking chart. I don't think this is over. I would rather see, and last thing on this, want to see it close above 31, maybe 2 days in a row. That would correspond with close above the 50 RSI. I'd really understand and synthesize who is in control of the buyers or sellers there. So it's 10%-ish away, yes, but you'd have much better conviction in your pocket on further upside. That's your number 1 trade of the year, up 121% year over year. Number 2, this is the memory AI game, South Korea, up 115%. Look at this, coming under some hard times here quite a bit, getting back to about 2-month lows here. This peaked on February 26th. It was so fun to trade, also scary, but that's why you have to have a system, peaked at $154. And look at that, a give back all the way to about 120, which is essentially where we are today. It is on the day. So what is the setup here? Understand the RSI is at 41. I don't love this chart right here, okay? This looks like it wants to head possibly to like this 112 worst case, 112 area right here, back to these former gap ups when it was middle of overbought back in the mid-January. This was like you'd have another $7 to get back. These aren't convincing candles here, but the best I could do is I know we're down today, a percent plus domestically, but the 200-day moving average, a lot of things are getting squeezed, and this is a year-over-year leader that could, get liquidity out of a huge gainer like this, up 115% or 6% less from a massive meme-like move in the junior silver miners. Gives me a little bit of pause for EWY. I almost be contrarian, and I almost want to sell like the 130 calls, but I don't think you're going to get paid a ton either, and it's also very illiquid in terms of the options market, EWY. But that's EW. Excuse me. That's South Korea. I'd wait for that. I like the junior silver miners a lot better than that. Almost even waiting for that. And the number 3, uranium, number 3, up a clean double year over year. Peaked on January 29th, same day as the S&P. How's that for correlation? 62.28. Beautiful holds here. The 200-day moving average. Yes, Dancing with the Devil. Also a Breaking Benjamin song, I believe. Shout out. Yeah, I think so. Yeah. Yeah, I think so. March 19th, it's had a tough 8 days here, but I think it's looking like to resolve higher. It's a flat day here. This thing is up a double year over year. You can see the last time it traded below its 200-day moving average. Obviously, yes, flirting with it here, an ugly RSI at 40. Look for this to base. This one I'd rather buy in terms of conviction too. This is my last comment on this before we sign off for a week. I'd rather honestly buy this with 1 or 2 closes above 50 even, because then that would let me know that my next target is 55. So I'd rather give up that I don't want to say confidence or protection or assurance, but I'd rather really see this stick the 200-day moving average. It's 46.53. Is it holding VWAP today? It's above it by 4 cents. This is tough tape. There's no rush. I would rather wait for this and have a break above 50. The junior silver miners, though, it does look good. I think uranium needs a little bit more time to really kind of stick. I think it's a little bit more risk on in this environment than folks would like to own it. Okay, so like I said, I'll be out next week. Friday is Good Friday. Thank you, God, for dying for our sins. Every one of us who are unworthy. And we will be back the following Monday. I hope you guys are doing okay in this marketplace because it is absolutely wild. Peace.